Welcome to the Crypto Traders Podcast, simplifying cryptocurrency for traders and investors around the world. Subscribe for interviews with developers, market updates, and a professional look at the future of money. You've come to trust Matthew and Kurt to filter out the noise across social media. Now you can listen on the go. Without further ado, here's the Crypto Traders Podcast.
Hey everybody, welcome to the Crypto Traders Podcast, where Matthew and I talk about all the awesome stuff going on in the crypto sphere. You can find us on iTunes, YouTube, Stitcher, SoundCloud, Google, Amazon, and everywhere else where you can consume podcasts. And today we're going to be talking about, well, a whole bunch of stuff. But before we get there, how you doing, Matt?
I'm doing pretty good. Today we got a pretty interesting topic. I think that's going to help a lot of people that have been struggling to figure out what to do in the bear market.
Yeah, absolutely. I think the bears have killed all of the people that were in for hype in 2017, all the people that thought they were going to retire early, and they are looking at 80 to 90 to sometimes almost 100% losses, depending on where you put your investments. I think it's interesting. Over the last couple of days, there's been some smashing news about ICO influencers, which I'd like to just say very early on, we at Crypto Traders said we are not going to endorse any ICOs ever under any circumstances. First of all, it was Matt's call based entirely on the fact that they don't have a chart and that it's just a risk play. And then me specifically saying that, well, I think they're unregistered and therefore illegal securities offerings. So now we have DJ Khaled and Floyd Mayweather.
What was he promoting?
You know what? I don't even know. I remember seeing them both promote. It's just some random garbage coin projects, I'm sure. Like they probably don't even exist anymore, frankly. But statistically, they almost certainly don't exist anymore. But
I haven't seen any ICOs in like this whole year.
No. Well, they collapsed. I think a lot of people realized that it was a hype cycle that died, and I think they needed to die. But I think a lot of people were very surprised. I think everybody thought like, man, this is the new fundraising model, and it's dangerous because it's too easy to screw people, and then when it's too easy to screw people, the SEC inevitably is going to step in eventually, which we were calling for about a year, and it ended up actually happening now. So it's one of those things. Like in hindsight, very, very glad we did not promote. We had a lot of pressure from people promoting.
People don't even know. We would get messages every single day on Facebook. We would get emails. People were offering us thousands and thousands of dollars to promote their ICO, but we figured it was just easier to just say no to everybody. And I'm glad we did.
Yeah, absolutely. No, I mean, it's a nightmare scenario for anybody that accepted money. Especially if they did not disclose that they were being paid money. And that's really where the real problem comes in, is that when you act like, hey, I'm investing in, gold coin or whatever because this is awesome. They're like, no, you're not investing in gold coin. Somebody paid you some damn US dollars to say you invested in gold coin. So I'm sure there's a gold coin out there that's going to be pissed off the way you said their name. Gold coin is a generic. I apologize in advance.
Do you think ICOs are going to come back again?
I think, well, here's the thing. Securities law is not really that complicated. And I think that securities and securities offerings are actually an important and valid thing to put on a blockchain. It's just when you do them illegally, under the guise of decentralization and everything else, I get it. It's cool. But the problem is we don't have a governance structure that fits there yet. And therefore, it's like a good idea that came out too early and screwed everyone up. So I think once all the regulatory stuff kind of gets sorted out, they will absolutely become a huge part of blockchain.
They're going to come back.
Yeah, they'll come back in full force. In fact, I could see in a decade, blockchain managed securities offerings completely replacing the IPO. But
that would be an STO, not an ICO.
Well, I mean, that's semantics, right? It's like essentially the same thing. It's just the legal framework that is different. So yes, you rebrand it, you put a new label on, and there you go. So
you think STOs will become a thing in maybe 2019? People trying to tokenize assets?
I doubt that it'll get sorted out by 2019. I think people will try. I think there will be strides. There will definitely be big steps. I'm sure we'll get news all year about, hey, here's next big thing. Here's the next big step to getting STOs or whatever it's going to be sorted out. But I don't think we're going to have mass scale STO or other initial offering types. Not in such a way that they're functional for the market. At least that's my sort of curmudgeonly estimation on it. All of it's too hard to do. Like right now, Ethereum, they're not even crystal clear whether that is or is not a security. And until that kind of thing really gets sorted out, then everything else, what is a utility token? Well, what utility does it provide? And is anyone using it as a utility token? The answer is no. They are sitting on Binance and waiting for pumps. And that's...
Except for BAT. That has utility.
BAT does have utility. And that's the thing. Coins like BAT, they're still kind of gray area. It's not crystal clear. And the reason for it is, like I've said all year, they're used 99.5% just for trading. I understand that the underlying utility exists, but it's not really being used that way. People are like, 5 BAT for doing XYZ, man. I just put $1,000 in my Coinbase account, or Coinbase now, and buy however many BAT you get for that. What do you, 6,000-7,000 BAT for $1,000 now?
Probably not that. Well, maybe.
With
the recent drop
20
in
cents
prices.
Yeah.
But
yeah. So, and that's the thing is,
it's so early though. These projects haven't fully developed into where there is any value to use them.
Exactly, and that's the thing. You get the two arguments, right? You get the Bitcoin maximalists that are like, yeah, this is what it's for. You buy it and hold it, and it goes up in value, and you get to be king of the universe at some point. And that's fine, but it's led to well, then why don't I make Kirkcoin and do the same thing with that? And it becomes de facto inflation that Bitcoin was supposed to stop. And then that brings in regulators, because all of a sudden we're all just pseudo professional traders, but we aren't providing value. We're not providing volume and liquidity to any other market. Traders that trade orange juice or cattle or sugar, they are providing a service in price discovery for international markets who use a product. Right. And nobody's waking up in the morning and saying, oh, I hope my BAT is a certain price because my internet business depends on it. It's just hey, cool, maybe it'll be up 10%. I can sell some and whatever. And, and again, this isn't a criticism of the people developing these projects. There's a lot of really, really awesome ideas. But when the idea is not being utilized, but the coin is being heavily traded, sorry, it is an unregistered and therefore illegal security. There just really isn't a way around it. And I mean, you can have this philosophical debate, but I guarantee DJ Khaled and Floyd Mayweather did not jump into the philosophical debate of the thing. They paid their damn fine because the government would put them in prison otherwise. So that's don't debate from a position of weakness. And frankly, if you're an ICO promoter, you are debating from a position of weakness, and that's a problem.
2019 is going to be the year the SEC comes in and just destroys all these cryptos.
It's possible. I mean, I think it will be the case for a lot of Ethereum stuff, and that's what it's part of the reason why I don't like Cardano and EOS is that they're unlicensed. So if you're a staker or a block producer, you are an unlicensed money transmitter. And that has its own SEC problems and FINRA problems. And then if you're then offering tokens that are launching on those platforms, then you're kind of an illegal securities exchanging mechanism. And it's just,
it's super gray area right now. They don't know what to do about it.
It is. And that's the thing is I agree with the arguments that they're not. I understand that they are intended to be utilities, but if they're not being used for that and they are just being used for speculation, then that's what happens. And that's how I mean, frankly, I really think that that's the reason we're in a bear market today, is that all this stuff was big broken promises, and now we're all getting punished for it. So
well, let's segue that then into what our topics today. We want to talk about portfolio management, some tips to surviving the bear market, because who knows how long it'll last. Right now, it's been, what, 11 months now? Going on 12 months? Mm-hmm. So let's talk about how some people could manage their portfolio in the bear market.
Well, should they just HODL, Matt?
No. That's the first thing we got to cover. HODL is the #1 cause of portfolio death.
Bring in the maximalists.
Well, it bothers me because I'm still seeing people say that, and until they get rid of that mindset, nothing's going to change. They're just... It's great in a bull market, but in a bear market, that's not how you survive. You're going to lose 90% of your capital. You're not going to have any purchasing power for when the bull market turns around. You're just holding and hoping.
For sure. You know, I had the conversation with Dustin on the Did You Know Crypto podcast, and we talked about Charlie Lee selling his bags at, you know, whatever it was, basically the peak. I think he sold the absolute tip of the candle on Litecoin. And I said, like, you know, as a trader, I mean, power to him, right? I mean, he saw the bubble. He understood that Litecoin was definitely short-term overvalued, maybe even long-term overvalued. And which, you know, inspires a whole lot of confidence from the creator of the project. But you know, you look at that and you say, like, well, I don't blame him for wanting to turn his probably largest bags of Litecoin in the world and turning them into you know, an actual store of value for the time being, which was US dollars. So Charlie probably made a multi-million-dollar trade there to maintain the power of his portfolio. And I don't fault him for that. Like, that's good trading. That's good portfolio management. But I mean, what do you think? How do you pick one of those spots, Matt? Like, I mean, we lived it. What did we recommend? I mean, I remember recommending to individuals. We hadn't really launched the full community yet by the time the market started to really drop out. But I know we were telling people to make sure that they were taking healthy profits. But I mean, what do you think? Sell completely out of crypto, sell completely into Tether when you get big bull runs? How do you make that call?
Well, back when Charlie Lee was selling his Litecoin, I mean, that was some of the best times to be trading, and especially trading on leverage. Like, we had the opportunity to make crazy amounts of money. My problem is I was then taking those USD profits and putting them right back into crypto as my store of value. So it took a few months for me to realize, okay, this is not working. I just need to go sit in stable coins, and it burned me in the beginning of the year. But the sooner people realize that, okay, bear market is not ending anytime soon, this isn't just a dip, the faster they were able to save their portfolio. Now, I don't even know if it's almost too late, or it could get a lot uglier. I mean, there's been charts we've made that show Bitcoin going down to $1,000 again.
All right.
That's another, 70% drop from the current price.
I've seen some people saying $700 or $800.
It's possible.
Yeah.
But and where I get that number, 1,175, that was the 2013 top. So we would be basically retesting that level of support. So if it does drop below 3,000, I mean, it could. So you have to prepare for that. And the best way that we've been telling people to prepare, and we made a hard call saying when Bitcoin was over 6,000, we're moving to stable coins, and we wanted everybody in our group to do that too, because we knew it could drop another 50, 60, 80% even. So right now, I think stable coins are the best bet. I don't think Tether. You should go all in Tether. There's so many stable coins nowadays. People have the options to pick. What are some of your favorite stable coins?
Well, I think, I mean, it's a complicated question. I've personally been very pro Tether fundamentally. I think Tether is actually legit. I think the business decisions that they've made, Tether Corporation and Bitfinex, all actually really make sense if you're not convinced that there's Chinese bots and all kinds of stuff controlling the market. We know some market makers who do market making stuff with Bitfinex, and we know how they operate. That like these are just people. These are people doing business, and the fraud FUD kind of stuff around Tether. I understand it. I don't think that that's impossible, but I don't think that it makes the most sense either. So I am a fan of Tether. I know that the price has dipped. I think we saw it dip to like 88 cents or maybe a little bit lower than that just about 3 weeks ago. So yeah, it's not the most stable thing in the universe either, but it is the biggest. It has the most liquidity, and therefore I would argue that it is the most trustworthy in a basic fundamental sense. But then we've also got a couple of new ones. I think the most interesting one is actually the Gemini Dollar. I think they call it GUSD. If you're looking for a stable coin that is actually stable for a reason in that it is guaranteed by some allegedly trusted third party, GUSD is FDIC insured in the United States. They also are filed under the New York BIT license, which is both controversial and, again, if you're saying like, well, you have to have 1-to-1 ratio of US dollar to your stable coin, well, then you're saying that you trust the US dollar, and therefore you would want the reasons that make you trust the US dollar, which are FDIC insurance and your basic regulatory compliance stuff. So GUSD strikes me as the best of that world, but then you've got this problem where people are trying to trade non-KYC and like, well, but if I use GUSD, I have to do it at a KYC exchange, and then I'm exposing my identity, and the blockchain's going to show how much money I've been making, and blah 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 blah. So you've got issues there, and it really depends. You have to really make a decision as a trader. Are you going to day trade and then take the tax burden on the chin and do all of your stuff legit, KYC, trade on US exchanges, trade on Coinbase Pro, that kind of thing? Or do you have Bitcoin from years ago, from back before it was regulated at all, and therefore there's no chain of custody that can prove it until you bring it into the US? And, so that really should make your decision for you. But stable coins are a trader's tool. And so that's a decision that a trader needs to make for their own portfolio management. There are a whole bunch of other coins. Binance just announced they're doing like an index of stable coins, presumably to create a little bit more balance and volume and liquidity in that regard.
I think you could trade those directly in and out of the dollar now.
It seems that way. And Bitfinex now opening USD to USDT markets. So there's a little bit more stability and transparency coming into that space that I think will ultimately make people a little bit happier. Is there a coin that, or a stable coin rather, that you prefer, Matt? Or what do you think?
Well, Binance is my favorite altcoin exchange, and Binance has TUSD, which TrueUSD is the name. I like that one. And PAX. Now, Vance didn't like PAX when we talked to him about it, but that's one that I used. And I like DAI, DAI. That's another one that I have that I believe is trustworthy. All these coins have either they're worth a little bit more than $1 or right at $1. Tether seems to be the most volatile one. There seems to be the most FUD surrounding Tether. So if you want to avoid that completely, then there's so many options now that weren't here in the beginning of 2018. So that's why I say 2018 has been the year of the stable coins.
Yeah, 100%. And frankly, the best portfolio management has been to quite simply stay in stable coins, except for, take a couple of major swing trades. I think the ones that stand out are maybe the first bounce of Bitcoin from 6,000 back up to about 15 or 16K.
There's been opportunities.
Yeah, there's been big opportunities.
March and April was a good bounce, and also September and October. Those were also good plays. But really, we've only had 4 good months this year of decent-sized bounces across the board.
Yep. Well, and they've been decent altcoin seasons a lot too. Like we'll get something like Stellar will move up 30% while Bitcoin is stable, that kind of thing.
And EOS in April went from $3 to $21. Yeah, and we caught all of it.
Yeah, EOS was a monster trade in the beginning of the year.
So there's been opportunities. If your core portfolio is sitting in stable coins, then you have the opportunity to play these month-long bounces, because that's usually how long they last. And I do believe we're going to see that in December as well.
Yeah.
Just based off my analysis and just how the market's looking right now. But there's been opportunities. You just have to be patient. And
Right.
so many people think you need to be in a trade all the time. You don't. Sometimes I go a month without placing any trade. I'm just watching or doing other stuff. You don't have to always be in a trade. You could sit in stable coins, keep your portfolio secure, preserve your capital, because you're going to need it when the bottom is in.
Sure. What's your favorite way to pick the bottom, Matt? What are you looking for? Is there ever a situation where you may actually attempt to catch the falling knife because you think you've spotted the wick on it?
Well, what I always tell people is look at the high time frames. So look at the weekly chart, maybe even the monthly chart and the daily charts. Your decisions should be based on those charts. Don't look at the 5-minute or 1 hour or even 4 hour to make your decision on when to buy. And that's how we came up with a $3,000 bottom. It's a key support level on the daily and weekly chart, and it hasn't been tested this year. So if we get buys as close to 3,000 as possible, we have a predetermined risk level. If it goes below 3,000, we leave. But it has the potential to bounce, and I think it could even go all the way up to 6,000, 6,000 before coming back down, maybe.
Yeah. And then do you want to see like a double bottom at 3K, or what do you think there? If we bounce at 3K, we come up to, maybe 5 or 6, and then do you expect it to come down to 3 and double bottom there, or would you expect it to come down if we can't make it above 6?
Ultimately, yes. But this is purely based on what happened before in 2014, 2015. I think it was 2015. We had the double bottom. It tested 160, and then there was several months that went by. It tested 160 again, and then it moved up. So we saw that double bottom. There was 2 opportunities to get in. So if you missed that 160, then you just waited, and you would have had the opportunity again. So ultimately, yes, I think we will see a double bottom before moving back up.
Okay. And then do you think, from outside of the technical analysis zone, we're looking at, some of this fundamental stuff coming up. We've got the BAKKT, the mysterious BAKKT, which I feel like is spelled in such a way to give me an aneurysm every day. But I look at BAKKT. I hear things about other ETFs. The VanEck ETF keeps coming back up, whether it's going to happen or not. Commercial mass adoption, which is my favorite fundamental catalyst. And then we got people saying, well, wait for Lightning Network or whatever else, or just simply NASDAQ, Fidelity, some of these other people opening crypto trading desks. Do you think that there will be a fundamental catalyst that kind of sets off that double bottom or takes us back just on a bull run without the technical analysis double bottom that we want to see? Or what do you think? Where are we going? What is that reversal? When do we start to see the volume come in and say, hey, this could really be a bullish thing again?
I think the ETF is really what everybody was hoping for. And I think it was last week or the week before we had the SEC commissioner come out there and say it's highly unlikely we're ever going to pass an ETF anytime soon. So, and we saw Bitcoin actually kind of move on that news. So I don't think we need an ETF. BAKKT, sure, it might be good for the markets, but I don't know as we need a fundamental event. Was there a fundamental event in 2015 that caused the bottom?
That's a good question. I don't recall anything specific. I remember that era. I don't remember if it was 2015, but it was that era of Bitcoin's history where there was like a lot of companies that were starting to advertise. So this was like Orbitz.com or Overstock.com. Like it was them saying like, hey, we're going to be a Bitcoin accepting business. So those are the things that stand out in my mind. But I don't remember anything. I don't remember any one big thing in that era that kind of set the bull off.
Natural uptrend that, and what really caused that bear market was the Mt. Gox hack. Whereas this year we didn't have a hack. We had futures launch by CBOE, and that was the high.
Mm-hmm. Yeah, it's interesting. It's funny because I think when I think back, like I think that might be why I'm so married to that, like, use as a means of exchange thing. Because for me, like that was the most exciting thing. Because I was an early Bitcoiner, but not like crazy early. I wasn't Roger Ver or any of that, but I was 2012, 2013 era. And I remember hearing about some companies starting to accept Bitcoin. I remember like Reddit, like, hey, we have a Bitcoin tipper bot, or we've got just various things like that, and saying like, wow, okay, so people are actually going to use this to send each other tips or buy things from each other, and that for me was like, all right, cool. By like 2020, we're going to be able to like Bitcoin will just be an option everywhere, and then it turned into like I hate the narrative change, especially because the people that talk about it act like I'm crazy, that I'm remembering it wrong. Like, no, there has been negative merchant adoption for almost 4 years now, and it's specifically because the development path changed. But
right now I feel like there's no coin except for Dash, maybe, that's really fulfilling that means of exchange.
There's none that's stable and secure, and I think that's the real problem right now. Is that like I was a fervent Bitcoin casher, right? And it was because like, well, that makes sense. It's the fourth biggest chain. It's got a lot of hashing power. It makes all this fundamental sense. It has a community drive that wants to do that. And then this fork drama has ended up making it that like, well, now we don't even like who's the real Bitcoin Cash? Is one of them actually the real Bitcoin? Is any coin in existence the real Bitcoin anymore? And of course, both ABC and SV say, well, absolutely, we're the real Bitcoin Cash and the real Bitcoin. And it's like, it's so frustrating because still fundamentally, like, I look at Bitcoin SV, for example, and say like, that's the white paper's coin. Like that's the one that makes the most sense there. But, it's now a smaller community, and I think it needs to prove that it's going to stick around. There's still people actively saying like, CoinGeek's just going to walk away. They're just going to stop mining it and it's just going to die and that kind of, and it's like, okay, so like it's unwise for an entrepreneur to say like, hey, you should be accepting, any of these coins right now. Like, first of all, BTC doesn't work as a means of exchange as a rule. Litecoin kind of does, but whatever. Dash works. Dash works pretty well. Like I think Dash right now today is actually the best option for that.
But it's so tied to Bitcoin's price.
Yes,
it's hard to get away from that. And
right.
I just saw a tweet from Dash that they have like 4,700 merchants on board, and like 2,500 are in Venezuela.
Right. Well, but you have to wonder, like, how much actual revenue is going on in Venezuela on Dash, though? I mean, if you go to an ice cream shop, how many people are paying with Dash at that ice cream shop? Like, that's the real question.
Well, they can't pay with the Bolivar, so what
right,
options do they have?
Yeah, I don't know. I don't know what the statistics are. It might be hundreds of customers a day at every one of these businesses, but it might be 2 a week also. Right. Like, we just don't know. I would guess that if it was 100 a day at 2,500 businesses, that Dash's volume would be considerably higher, and that the price would also separate itself from Bitcoin's. But still to this day, despite all of its scaling issues, Bitcoin still has more network volume than everybody except for, depending on the day, Ethereum and Ripple. So whether you can say that one is intrinsically more commercial traffic and one is not, a lot of people speculate that Ethereum is just a lot of BS. It's a lot of people testing smart contracts and stuff. And then that Ripple's is a lot of them testing like insider stuff with their banking partners and everybody else. So people say that no, Bitcoin always has the most commercial volume, but we don't really know what that is either, because there's almost nobody that's accepting Bitcoin as a means of exchange. So what is everybody doing on these damn networks? And I think the answer is it's still just a lot of trading. It's a lot of trading, and I think there's the irregular person who is like moving cross-border payments, or they have wealth that they need to get out of a country that doesn't allow you to transfer a lot of wealth out, that kind of thing. But yeah, so I think we're in a little bit of a precarious time as to like what the right direction to go. What is the catalyst? What what coin can you actually recommend to your merchant friends? Like, hey, use this coin. It will go up in value. It will be here in a year, and everything else. And there's a couple, but it's all speculative.
I think people are scared right now to use their cryptocurrency because they don't know what the government stance is. Like, if I send Kurt Litecoin, am I responsible for paying tax, or is Kurt responsible? Are we both responsible? We don't know. So people are afraid to use their cryptocurrency because we don't have clear guidelines right now.
Yep. Very weird situation. Once again, exacerbated by bad players, by bad government policy, by FUD and the big banks and everybody else.
People are scared of the government. They don't want to use crypto.
Yeah. Yeah.
That's true. I talk to people all the time because I want to pay every person in crypto because that's what I have. So people are like, all right, well, how do I access it? Or is this going to cost me taxes, or do I have to pay tax on it? I don't know how to answer that, really.
Right.
Still a gray area.
Yeah, it is, unfortunately. So I think while we're talking about portfolio management specifically, if we're sitting in stable coins, we were looking around for ways to sit in those stable coins and perhaps make money on them. Matt, you discovered compound.finance. I think you found it today. You shared it in the pro group.
Yeah.
And we're kind of looking into it. It seems like it's basically Ethereum-based lending platform where you can stake your coins, and they appear to be giving 13% APR on people staking DAI coin, which is I believe it's the Maker. What do they call it?
Yeah, Maker is the platform.
That
DAI runs on.
Yeah, so that's their stable coin. The DAI coin, which you can use. It's available in Exodus and a couple other spots, but it looks like you just have to have the MetaMask Ethereum plugin, and then you can use compound.finance in order to accrue 13%. It's 13 and some change APR on your DAI that you are staking there to be lent out on the platform. So what else?
It's 9%. It went down. But
it went down. So see? All right.
If you're holding DAI, and I'm not sure. You guys are going to have to look into this. Go to compound.finance. And you can read more about this, but DAI is one of the stable coins we talked about that has actually remained quite stable at $1 or a penny up or down. But if you're, I think it's staking or lending your DAI out to this platform for other people to use for margin trading or whatnot, you're able to earn 9% APR interest on your holdings.
Well, and seemingly that number fluctuates based on how much is going in and out of that platform, because it was 13% a little earlier today. In fact, it was just about an hour ago. So maybe that was just the random spike there. But what are some other ways that you can make money off of your stable coins, Matt?
Well, my favorite way is to play on Bitfinex. So if you haven't already heard about Bitfinex, Bitfinex is one of the only exchanges that offers margin trading pairs on almost all of the large caps and even some mid caps or smaller cap cryptos. One of the most liquid exchanges. What I really like about Bitfinex is they have USD, BTC, and ETH pairs. But if you're holding USDT or USD, whatever stablecoin in your Bitfinex account, you're able to leverage that and play any pairs you want, and you'll be able to get profits. So if I'm playing BTC pairs by leveraging my stablecoins, which I could do, I would be getting profits in Bitcoin. Then I could take those profits and turn them into USDT or whatever. But you're allowed to play any market, ETH, BTC, or USD, if you're margin trading with your stablecoins.
Yep, it's pretty cool. It's typically what I would do myself. What about lending them to margin traders? Is that a profitable...
On Bitfinex?
On Bitfinex, yeah. I remember a couple of our pro members have said that they were doing it years ago and making huge returns, but I think that's turned into a little less of a lucrative venture, but still a profitable venture nonetheless.
Well, it depends how active you want to be. Like, if you don't see any trading opportunities, or let's say you want to take a break from crypto, but you still want to have money in crypto, you could just turn your portfolio into stable coins and just lend it out for a month or 6 months, however long you want, to other traders that are looking to margin trade on Bitfinex. Now, you're not going to get a ton of interest, but you are going to passively earn a little bit, and it's legit because you're lending it to margin traders. You're not just putting it into a lending platform like BitConnect. You're actually giving it to margin traders so they could play with leverage.
Yep. That's I mean, it makes sense to me for people that are maybe beginning to learn about trading, or especially margin trading, to perhaps be a liquidity provider there. But what about the Bitfinex fears? I think a lot of people are really, really scared that Bitfinex is just going to go belly up or just steal their stuff and walk away. And we've been
possible.
Yeah, I mean we've been generally pro Bitfinex, but that kind of thing is not guaranteed not to happen either. So.
It hasn't happened yet, though, and all the FUD has been kind of disproven, because if you would have sat in stablecoins January 1st, well, odds are your portfolio would be worth a lot more Bitcoin than it probably is right now.
Yeah, for sure. So there you have it, ladies and gentlemen. How to manage a portfolio in a bear market. You got to be quite a bit more creative. You have to be, and I've been saying this a lot lately, you got to be more shrewd, and you don't want to be anti-crypto, because it's not what I intend to be, but you have to be a wet blanket to your own hype cycle, because all of us want to buy something and become rich, especially if you can become rich quickly. However, that's not how the real world works. And proof of work is one of these things that is based on the real life necessity for the proof of work, right? And what is the proof of work? Proof of work is that you have been rewarded by being paid in something. And that's kind of the point that underpins Bitcoin and its economic model. And it needs to be transplanted out into the real world, that if you want to earn Bitcoin or other coins, you need to do work. And the proof of that work will be an abundance of cryptocurrency. And I think people need to realize that there's almost never going to be a time in your life when you can just sort of accidentally become rich off of throwing $500 at something. And it does happen.
It's 2017 in crypto.
Well, sure. I mean, people still win the lottery, or people will, dig up a gold meteorite in their backyard every once in a while. And that does happen. So it's not completely out of the realm of possibility, but statistically you need to learn to be your own boss, be your own bank, and be your own advocate, do your own work, because people that consistently show up with a systematic approach and they stick to that approach that earns them money slowly and compounding, give it some time. And by time, I mean maybe
several
5
years,
maybe 10, maybe 15 years. You can go from somebody who's participating in the rat race to somebody who is, that upper class. Maybe you'll be a venture capitalist in 15 years, but it's going to take systematic work, and you have to expect to do that work in order to benefit from it.
Yeah, I wouldn't come into crypto with the attitude of this is something I could jump in with no prior experience in trading and instantly just make it happen. The people that are going to be most successful in crypto are the ones that do not give up. They show up every single day, and they're constantly looking to improve themselves. What I found to be really beneficial to me, and this is something that's proven, recording yourself trading. Record what you're thinking while it's happening. I did this in November 2017, and this is when I had all my biggest trades, was when I was sitting here every single day. I would log on the computer and start recording and sharing what I'm seeing on the screen, and it really helped me stay disciplined and focused on the bigger picture. Then you can go back and say, wow, I made some of these dumb mistakes. I could have made so much more money, but it helps you learn, and you're constantly getting better.
Yeah. I think it's awesome advice. So I just want to remind everybody, please subscribe. You can subscribe on YouTube, iTunes, the Apple Podcast app, SoundCloud, Stitcher, I believe Google, Amazon, a couple other places. Sometimes the links just break, and if they do, let us know, please. But yeah, please subscribe. This is the Crypto Traders Podcast. You can also find us at cryptotraderspro.com. We're the number one educational resource to teach people how to manage their portfolio, teach people how to aggressively trade, provide value to themselves, We don't trade as a way to empower ourselves as heads of the community. We're looking to make you self-sufficient. That's our goal. We want people to have become self-sufficient, successful, become an entrepreneur in the space based on proximity to CryptoTradersPro.com, and that would be the big benefit to us is knowing that we helped people become great in the crypto sphere, especially during the great crypto winter, which is what I think this era will end up being called. Crypto depression, crypto apocalypse. But we're making it happen, everybody, and we appreciate you listening. Please like, share, and everything else. And until next time, everybody, Matt and I will see you on the moon.
See you on the moon.